I'm joined by Amanda. Amanda, you're very welcome back. Thanks a million for coming in. We're going to go through some questions. Will we just jump straight in?
Yeah, jump straight in. Question number 1.
Let's go for it.
I have 2 questions. One probably feeds into the other. We're trying to get mortgage ready, and my partner has a €5,000 loan with an institution. We have a separate savings account. We have a savings account for the deposit, and then I have a separate account that I have a bit of money in. I would have enough money to clear off that loan. Should we do that before we apply for the mortgage? And the other thing is, I am pregnant. Am I obliged to inform banks or financial advisors that I am pregnant? I am being paid. I'm lucky with work. I'm paid for the next 6 months. But is that something that I have to disclose? Thank you.
So there's two and one there.
2 and 1. Let's go with the second one first, and you can remind me then what the first one was. The second one was around the pregnancy.
Yeah.
Interesting enough, with pregnancy, like that person's getting paid for 6 months. It's not going to affect their finances. Assuming they're not going to take time off. There's no reason why you would hide it from the bank. In fact, I remember, now this is years ago, right? But I remember an application where they had 2 kids, and without the kids they didn't qualify, and with the 2 kids on the application they did qualify.
Really?
Which was I think it was just a glitch in the matrix or something, whatever way it had worked. But that's actually what happened. But like, this person shouldn't be worrying about it. In general, what I would say is that the last thing, when it comes to a mortgage application, whether it's disclosing that you're pregnant or disclosing or hiding something else, right? My advice is you are better off getting everything out on the table at the start, because the last thing you want is to be much deeper into the process, them to discover it from themselves, then to question everything else you've told them, and then the whole thing falling apart.
The trust.
Yeah, the trust gets broken down. And that accounts for if you've had a problem with loans in the past. You're better off coming up front and putting your hand up and doing it like that. Pregnancy, I would think, is the same thing. I would say, look, just if there's information that you think is material, get it out there, get it dealt with and move on, as opposed to it coming back to bite you in the arse at some stage. That makes sense?
Yeah. And I know some, I don't know if this is true, this is something that I've just heard, that some banks, they lessen the amount that you can actually get on your mortgage based on how many kids that you have. Yeah.
So what happens with it is that the central bank says you're allowed to borrow 4 times your salary, right? We've covered that, right? But they do need to make sure that when you make the loan repayments, that you still have a salary, an income left over to cover the cost of your living, right? Yeah. And the cost of your living does increase based on how many kids you have. So if it's a really tight loan, like, interestingly, it used to be a case with mortgages that you could, there was a different calculation, without getting too technical about it. There was a different calculation, which meant you could borrow much more than the 4 times. Okay. And therefore, now that the rules have come back to 4 times your salary, there is a little bit more manoeuvring to be done. Okay. There's a little bit more space left over with people's income. Yeah. Because the 4 times is a little bit stringent compared to the way we used to do it. Yeah. So the answer to your question is yes, each child adds a cost to how much money you need to have left over after the mortgage.
It's more to do with the cost.
Yeah, it's to do with the cost. Yeah, absolutely. So that's taken into account. I think the first question was, correct me if I'm wrong.
He has a loan. So they're going for a joint application, herself and her partner. He has a loan of $5,000. She has savings there to pay off that loan of her own money. Yeah. And her question is, should they do that?
Should they clear off the loan? Yeah. If you're that close to being mortgage ready and applying for the mortgage, you're not going to be disadvantaged in any way to let the bank decide what they want you to do. Yeah, yeah. So walk into the bank and say, listen, have this loan, have the savings there. Do you want me to clear the loan, or do you want me to put more of my savings into the house? What would you prefer me to do? Okay. So, and that's the same. If it was miles away, say you were 5 years away from, or 3 years or 4 years, then I'd start weighing up clearing off the loan, saving the interest on it, and then trying to replenish the money that you just used to clear off the loan. Okay. But if this person sounds like they're close enough to it, then get the bank to decide what the right thing to do for them is. Because it might be different for different people. Yeah. Okay. We go for another one?
Yep.
Okay, let's go for question 2.
Hi Eoin, my husband and I have just gotten mortgage approved, and we really don't know how to work out how much we can afford to pay every month. Is there any way to know for sure that if we take out the maximum we've been offered, that we'll actually be comfortable in paying that in the future, because the mortgage will be 25 years? Would love to know your thoughts.
Okay. First of all, what I'd say to you is this person sounds like they might be worried about having loan repayments that they can't afford, there's nobody more worried than the bank.
Yeah,
right?
yeah.
They want to make sure that you can afford it. The central bank want to make sure you can afford it. The central bank rules mean that if you get approved for the loan, it's likely that on paper you can afford this, or it's true that on paper you can afford this. Sometimes we need a little bit more comfort than the bank's being satisfied, and we need to satisfy ourselves. This is where the 35% rule comes in.
Okay.
So the 35% rule is you can afford to spend 35% of your wages on your financial commitments. Okay? Not utility bills, not crashes, not any. I'm talking about financial commitments, and crash actually throws the whole thing up in the air. I shouldn't have mentioned that. But anyway.
Yeah.
Okay. But your financial commitments are your mortgage repayments, your loan repayments, your rent if you're not paying a mortgage, your rent. So your car loan, your personal loan, any loans you have, and your rent and or mortgage, rent/mortgage, whichever one you have, should not be more than 35% of your salary. So
Okay.
in simple terms, if your take-home pay in a month is €1,000 a month, €350 a month is what you can afford for your financial commitments.
Okay.
When you go over that, it's not sustainable long-term. There are lots of people, particularly in Dublin, Galway, Cork, Limerick, who are probably paying 50, 55% of their salary, even more, out on rent. Never mind if it's a mortgage, right? Paying it out on rent. And what happens there is it can keep things at bay for a little while, but sooner or later you're going to start dipping into overdraft, you're going to start dipping into credit cards, and people might be saying, well, what can I do? What can I do? This is where I have to live. What I'm saying to you is that don't wait for the problems to hit. Try and do something, make some change now, whether that's getting someone to move in with you, sharing, getting a smaller place. Like, these are the really, really difficult, hard decisions that need to be made, because if you haven't created a financial problem for you now because you're breaking the 35% rule, it's in the post. It's coming to you. And you need to be aware of that. And you need to make whatever changes you can now before you end up in financial strife with this.
Okay, so say this person should make sure that they're within the 35% limit. And I suppose I think it's important. I know you've touched on this at different times as well. More than likely, your salary and stuff is going to go up over the next couple of years. Your mortgage payments should actually seem like less over the next couple of years. But I was the same. Like, when you're locking into your mortgage, it is a kind of, oh God, I'm locking into this payment per month. It seems like a lot, but.
And you've actually touched on something else. Sometimes people would say to us, I want to pay more off the mortgage each month, and I'm going to pay a little bit extra off the month because I want to get rid of it, right? What I'm much keener on people doing is keep the mortgage coming down on a month-to-month basis and pay off the mortgage as it falls due, but then build a savings pot on the other side. And obviously if it's more than 5 years, we're going to use a long-term savings pot. So you get to the point where you've got enough in your savings to clear off the mortgage in one go, because you get a huge emotional benefit for clearing off a mortgage in full, but I'm not sure you get the same emotional benefit by doing a little bit extra every month, right?
Yeah.
But you're also keeping all the control on your side of the table. You've all the control now. You're controlling your savings and you have the mortgage coming down. But when the amount of times a client builds up the savings, now they've got enough in the savings to clear off the mortgage, and they say, the mortgage doesn't really bother me anymore.
Yeah.
Right? Because as time moves on, the
it's
mortgage...
It's just the safety. It's having your safety net there, that if something is to go, it's the same with having your buffer, it's the same with having anything. It's just having that safety net it just makes you so much more comfortable.
Yes, and it's about keeping the control on your side, because the more control you have of your finances, the more comfortable you're going to feel.
Okay.
Third question. Let's go.
Straight into it.
Hi guys, I listened to the pod. It's really, really informative. I just have a question on saving for a mortgage. So I'm in my 20s. I have the bones of 20 grand saved for a mortgage. My partner, I'm not sure what his story is. I'm just wondering from my side of it, about 2 years ago, I invested a sum of money into a family business, and I'm getting interest in return on it. And I don't get the full sum back until the 5th year. So I have another 3 years to go. I'm just wondering, in the new year, we're planning on going for a mortgage. Will they see only the X amount that's in my bank account saved, or will they take into consideration that I have that sum of money? It's like it was an investment for me. Will they take that into account as well? Thanks very much.
I messaged just this lady back just to clarify. The 20 grand is separate to the investment that she put into the family business. So she has the 20 grand still there.
Okay.
And then she has a separate amount invested in a family business.
And basically her question is the bank going to recognise the money that she has invested in the business?
As part of her savings. Yeah.
They're not. Sorry,
Yeah.
and let's just be really clear about why. First of all, it's not available today to go into the
No.
house or
Yeah.
to go into the purchase price. So it doesn't really make a difference, right? It's not, like what the banks want to see is that you've got skin in the game, that if you've got your 10% deposit covered off,
Yeah,
great. Because they want to know that if they have to take the house back off you and they want to clear off their mortgage and cover their costs. That's what it comes down to. So that money isn't available to go into the house. So it's not going to be taken into account. But also, if I were the bank, I'd be going, it's a family member. Like, we have clients all the time who come to us and say, oh, my brother or my sister needs a loan of money, or my uncle needs a loan of money. Business is really successful. I'm going to put the money into them. And generally the way we do it, and this person might be very different, but generally when we're building out their financial plan, we put it down as an expense, not a loan. We assume it's gone.
Okay. Yeah.
And if it comes back, great, it's a bonus. Brilliant. So like, when it comes to family and business, it often feels like it's the right thing to do. And if you're in a position to help them out. But I don't know anything about this person's family business or the money that she's put into the business. But if I were a bank, I definitely wouldn't be confident that you're getting the money back. So therefore, I wouldn't be taking it into any mortgage application. She did say something else there, which I think is really interesting. What is it? Go on. What do you think are going to go on next?
About the partner.
Yeah.
Yeah. Her not knowing his situation and...
Like, that's mad, Ted. Come on, like, the two of you are about to buy a gaff together. Like, you need to... And particularly if like, she's talking about in the next year or so, she's going to buy this house.
Yeah, I think she mentioned in the new year. So, yeah.
Yeah.
Communicate.
They need to communicate on where they're at, because sure, she can't even play with Daft at night time or myhome.ie at night time to figure out.
I'm sure she still is.
I'm sure she still is, yeah, but she's dreaming. It's like she needs to step in. She needs to get her dreams and reality and get them mixed together for once.
Get it in line and actually, because you're going into a big commitment together and absolutely you need to figure out their situation as well.
Do you remember that? Dreams and reality. Do you remember that one? No, with Ted.
No.
No, do you not remember Ted and Duke? Come on. Dreams and reality. Yes,
sorry, I do.
It's almost as famous as This Is Small and That Is Far Away. I think it's actually the same one. It might be the same episode. Anyway, yeah. She needs the dreams and reality to start coming together, and she needs to have a chat with her partner.
Yeah.
That was the questions for this week, Amanda.
Yeah,
Let's do your usual call out. Is life getting easier? Are people sending you voice notes?
Yes, life is getting easier. And honestly, there's been so many really good ideas for future podcasts as well. So please do keep those coming in as well.
And we are keeping them just because we will come back to them. And I know there's some interesting guests as well. I've started putting their names forward in terms of I classify the type of guests on the show. They're going to be real people, which is real people.
Real people with real stories.
Yeah, or professionals.
Yeah.
And we've got some really nice real people coming forward and saying, I wouldn't mind coming on the show. And don't worry about people, and I know this is your message as well, people don't need to worry about where it fits in or what if it, just tell us what your story is, give us a bit of background and we'll make it fit, because sharing your ideas, your stories help everyone. Yeah. What's your WhatsApp? What's your number?
So it's so send your questions or ideas by voice note on WhatsApp to 087 291 0507. So that's 087 291 0507.
It's gone actually too far now. I'm never going to catch you out, am I? Because this isn't your actual mobile. Like, this is the This is the Prosperous work phone. So they were never going to catch you out. That you've got to embed it in your head now.
I know it now.
Okay, what is it again?
087 291 0507.
Well done. Excellent. Okay, Amanda, thanks again. We'll talk to you soon.
Thank you.